All right, guys, I thought I'd come on here today and go over a weekly recap of the stocks that I had mentioned all throughout the week. The very first one that I had mentioned was this Mohawk Industries here, MHK. You'll see what I liked on the monthly was the fact that we had a nice bullish flag followed by an inside month. And then we actually broke out of it and made some highs here in the month of October. And then we had a pretty bad, it wasn't even a bad earnings, but the guidance was pretty low. So we had a bad gap down here on Friday. And what we did, we actually closed this gap here, but created a new gap. And I actually think that this is an excellent buying opportunity, and I will tell you why. So first of all, the RSI is way oversold, and we have an excuse to close this gap here. The other reason is the fact that on the weekly, we did break out, and the earnings wasn't necessarily that bad. It was just influenced, by some of these hurricanes and stuff like that that have hit Florida, and the housing market. And we have we're still in this candle. We have 4 trading days left. If we can come back and close somehow above 145, inside within this candle here, I think that's a very healthy sign that we can continue higher and continue our original thesis that this was a breakout to the upward end of it. But we'll have to wait and see what happens throughout the next few trading days. But I do think this is an excellent buying opportunity in preparation for that. The daily chart, it's going to look to rebound. It's going to want to rebound. It's going to want to close this gap at some point, and we'll see how long it takes. If it does not do that, and this candle stays, similar to how it is now, I would consider that a fairly bearish sign, but it's a stock market. I cannot tell you the future. The next symbol here that I had mentioned was KEYS. I think what I liked here was this super healthy engulfing monthly chart back in August. This is a very healthy candle here. We came down, tested these lows, came back and closed above the previous week, and we've been consolidating since. The weekly doesn't tell us a whole lot, and the daily doesn't tell us a whole lot either, other than we did gap up, and we did come down to test out that level of where we were previous to the gap, and now we're right around the levels of where it gapped up. So I do think that this whole area here is a great buying opportunity. You can see the daily RSI is mid-range, so meaning it has lots of room to run. You can see in the past the RSI has gotten up quite high. It's going to want to do it again. It did it here, and it's looking like it can do it again sometime in the next few weeks as well. CFG, let's have a look on the monthly. This is what I liked on the monthly. Obviously, we had an inside month, and we broke out. And then we're currently right at the mid-range of previous month. I'm going to look at this to continue. Great buying opportunity. I don't see any reason why this this should break down. If you look on the daily, again, you have these top ranges on the RSI, which we are nowhere near. We definitely have room to run on the RSI, so I can definitely see this one getting up to 50, 57 sometime in the next few weeks as well. And then there were a couple that I was particularly bearish on. that would have been EPAM. If you look at the monthly, again, we had an inside month that we broke down on, and we're in the lower range of that. We did have a gap down that we came up, tried to close, got very close, and we did not succeed, and now we're on our way back down. So I see this one as a fairly bearish chart, you know, looking like we could go down to 174, 175 range, potentially 150 over the next couple of weeks, but we'll have to wait and see what happens on that one. Another one that I'm fairly bearish on is TECH. I think it was very similar here. You had two inside months again that we broke down on, and we're at the bottom range. This is a fairly bearish chart here. So I'm looking at this to continue over time, possibly down to, you know, the 54 range. It might be hard to, you know, that might be a good buying opportunity when it gets down to like 54, 55. But I don't see any reason why this is going to recover anytime soon. This range at 69 is a very strong range. You can see it started back here in 2020, finally broke out of it, came back down, tested it, and it's been a significant range for a while, and we're currently pushing through it. So yeah, I wouldn't be touching this, you know, until at least 70, 63, potentially like 52. You know, it might be a buying opportunity at 52, but time will tell. And then the other one was TYL. Here we finally had a healthy break on the upside on Thursday, and now we're taking a bit of a breather. The reason I like this one was because I think it was the weekly that I really liked on this one. If you go back a few weeks, we had an inside month. So we had 3 inside months in a row that we broke out of, which is a very healthy sign that it's going to continue to break up. And when I had alerted this on Tuesday, I believe it was, we were right around here at 586 or so. 586. So we were right about here, which is a very, very healthy entry point right here, which is right about the point where we broke out of the final inside month. So that's a very, very, very excellent entry point. If you were to capitalize on that and sell some at the high here at 630, I do believe that was one of the points that I had mentioned on that video. That would have been a great move for you. We have taken a bit of a breather. I do think that this will continue. The reason for that is because when these big moves happen, the RSI tends to spike with it, and you should normally see a spike to previous ranges here, just as we did in July and May. So we still have room on the upside. I absolutely see this one continuing to like 650, 660 range. The next one that I have is AMGN. What I like on this one, actually this one, I don't know what's going to happen on this one. I just know there's going to be a big move in the next month or two. The reason for that is because we are in our 3rd inside month. So we started with this candle here back in July. August was an inside month. September was an inside month. And October looks like it's going to finish an inside month. So this one's, you're going to want to keep an eye on this one. I don't know if it's going to break up or down. If you're looking at the daily, we did have a gap up that we never closed, so we could potentially look at, you know, breaking down a quick spike. We could have a quick drop, you know, over the next couple weeks down to the 270, 275 range. And then a recover from that. I don't know. Time will tell. I'm just telling you what the chart's saying to me. The other one, the next one that I have here is Match. Match is in a very, very healthy position here. The reason why I like this one is it's very similar to TYL, where we had an inside month, although we were looking at the weeks there. And we're right at the mid-range of the previous month. And we've already broken to the upside this month with 9 trading days left. And you can see it hasn't been too healthy in the last few days, but it doesn't mean it's not going to continue. It just means it's a great buying opportunity. You know, the daily RSIs come down, so we have a lot of room to the upside on the RSI. And you can see these few spikes back in January, July, August. We're going to look at having another one, I think, in the next couple weeks here. This can absolutely run up to 42, you know, continue to 40, you know, 45, 47. It might take a little bit to push above into like the 52, 55 range. But if we can do that, you know, this is a very, very healthy chart that I see here. And then we have 3 more. The next one that I have is EA. Let's have a look at the week, at the monthly. Nothing really that's telling me on the monthly. The weekly, I have, again, an inside week that we broke out of, and we haven't yet continued that breakout, which I do expect. It's a great buying opportunity. We're right at the range of where we finally broke out. I do see this one continuing up until at least, you know, 150, 153. The RSI has room to go. You know, you're going to want to see these spikes in the RSI. That's going to give you a signal that we've made our move. So this could potentially, you know, break us out into all-time highs in the next couple weeks. IPG was the next one I was looking at. Let's have a look at the monthly. What I was liking here, I think, was the fact that we are again in a inside month. So I don't know what's going to happen. These are fairly healthy candles. This one specifically is a healthy candle that we didn't continue on of. Instead, we had an inside month followed by an inside month that we're currently in. I don't know if this one's going to break up or break down, but looking at the chart, the monthly chart, I do think that, you know, I'd be on the bullish side of things. The weekly doesn't tell us a whole lot, and the daily doesn't tell us a whole lot either, other than the fact that we did have a gap back here in 2021, which we never did fill. And we've kind of been in this range for many years since then. You know, it's a fairly significant range that we're in right now. We're right around where we did gap. I can't tell you what's going to happen here. What I can tell you is that if we continue in this range for the next few days and leave this candle as is, then I would not be surprised if we break down to that original gap area in 2021, which was around the 21 range. If we break up, you know, absolutely expect to feel another gap here. You know, 35 might be a target, 38 the secondary target, and 41 another target for exits on that one. But we will have to see what happens on the monthly chart, where this candle ends up and where we continue our next candle. And the last stock that I had brought to your guys' attention was GD. What I liked about this one was that we have been in a healthy trend for a while. This is looking at the monthly chart here. We had a healthy candle here that came down, tested the lows here, and then came back and closed high. Then we had another one that kind of did the same thing, but didn't go down as much. And then we broke out of that. But we haven't had a significant breakout. We've just kind of been in the same area. So what that's allowed us to do on the daily, again, we've taken a break on the RSI. We're mid-range. We can absolutely have another strong daily RSI that brings us up to the 230, 235 range. That's absolutely what I'm looking at on this. So that's a weekly recap of the stocks that I brought to your guys' attention this past week. I don't know what the future will hold for these stocks. I can just tell you what the charts are telling me and give you guidance there. If you have any questions, feel free to leave a comment. If you have any stocks that you want me to check the charts of and give you my opinion on, I'd be happy to do so. Just let me know in the comments. And if you do find these videos helpful at all, please do subscribe. It will help me a lot, as I am just starting out on my YouTube journey. But I've been looking at these charts for many, many years. So until then, I'll probably come out with a video tomorrow of what I'm looking at specifically for Monday. But those are all the stocks that are still on my radar and the reasons why. So I will come out with another video then, and please leave a comment and subscribe until then.